everyone, this is David Lager from bngloans.com, and today I've put together a quick training about business credit lines, in which we're going to discuss the current market for business credit lines, and we're going to talk about some of the things that you need to look out for, as well as discuss creating the ideal scenario for funding your business. Now, business credit lines are similar to flexible loan accounts from a bank in that you're approved for a specific amount, and then you can take out what you need, when you need, to boost your cash flow or to cover emergency expenses, so on and so forth. Now, each amount taken is going to be treated as a separate loan that's to be repaid with interest that's separate from any of the other loans that you've taken out against that line of credit. Now, it's a great option for businesses that have a consistent need to infuse cash flow, and they would rather not deal with the hassle of consistently applying for loan after loan after loan when their business needs funding. Now, typically, to qualify for business credit lines, you need to have a low 5 bank rating, which in order to acquire a low 5 bank rating, you have to maintain no less than $10,000 in your bank account for a period of 90 days. And some financial institutions will require that you maintain that low 5 bank rating for an additional 90 days. So it can be anywhere from 3 months to 6 months of maintaining no less than $10,000 in your business bank account. You need to also have a 680 plus credit score, verifiable cash flow that's consistent, and then you have to have responsible bank account management, which can include any insufficient funds or bounced checks. Now, if you're a startup, you're going to need to have a very detailed and solid business plan, and then your personal credit score is going to be used in lieu of your business credit score because you have not yet established that. Now, various financial institutions' criteria is going to be different, but these are the main factors that are looked at. If you have any questions about the low 5 bank rating or the credit scores or cash flow or the account management, then you can find more detail at bngloans.com. Now, repayment terms for business credit lines, they're going to be negotiated at the time of application. But generally, each loan amount is going to incur its own unique set of fees depending upon whether it's used for purchases or payment of specific expenses or for cash flow. Now, as always, Now, as always, you need to set parameters in place for each loan cost to determine if it's the right choice for your business. Now, you can sometimes benefit from having multiple loans out due to lower interest rates and fees over business credit lines, but it does remove the convenience factor. Now, the way you determine if the loan cost is right for you, then you need to determine your potential profit as a direct result of the loan that you would be taking out against that credit line. You calculate 30% of half the profit potential. Once you have that profit potential, it's an estimation, a realistic estimation, then you basically cut it in half to be conservative and to allow for variable change. And then you take 30% of that, and if the loan cost, like in principal or in fees and interest, not in principal, is going to be more than 30% of half that profit potential, then you need to consider different funding options because we truly believe that you can find them if you follow our steps to achieving the ideal scenario for funding your business, which we're about to talk about here in a second. All right, so next we wanted to discuss the ideal scenario. We receive a lot of questions about whether a specific loan or line of credit is the right financing decision for a business and whether there would be other alternatives that would have better terms. Now, the answer to that question is difficult to predict given the variables on both the businesses and the lender's side. So we would like to propose a better question, which is what we feel business owners should be asking. And that's, how do I find the best loans or lines of credit with the best terms for my exact financial situation? Now, I know this may seem obvious, but if you've spent any time researching up to this point, then you know how vague financing companies can be when they're trying to get you to apply for a loan. And the reason is they don't want to deter you from applying. Lenders and financial advisors have quotas to meet, and the criteria is sometimes a little bit more lenient than, say other times of the month. So if they put hard criteria down on their application or their website, then they could lose the chance of you applying in the first place. And that leads to businesses applying to loans that they're not qualified for or wouldn't be a good option for their business, and then they're denied without much explanation as to why. So the solution to the problem is knowing your business's fundability from the start and then understanding how it coincides with the specific lending criteria prior to applying for any loans or lines of credit. Now, this allows you to make the necessary adjustments to ensure that you're approved prior to ever applying. So we strongly recommend that you acquire your business fundability score. And you can do that by taking a short test that's available through our website at bngloans.com. And this is a no-cost test, and it's a lot like looking at the exam the day before you have to take it, so you know exactly what you need to study. Now, this isn't like a test in the true sense of the word or something that you have to study for, but we call it a test because it's a rating or a scoring of your business, if you will. And the study part comes when you're fixing any of the problems prior to needing to pass the lender's test when you actually apply for a loan or line of credit. Now, what the test does is it provides invaluable insight into your business's financial foundation. And it's going to allow you to see exactly what loans or lines of credit that you're pre-qualified for right now. And it does this all without creating an inquiry on your credit report. So if you were to go off and apply to a bunch of loans and lines of credit, that creates an inquiry on your credit report. And if you consistently do that, then it's a negative impact. So the unique advantage here is that you're going to see your business from a lender's perspective. And you're going to know if there's anything that should be corrected prior to ever applying for a loan or line of credit. Now, this creates the potential for that ideal scenario of having multiple funding options available to you where you can pick the best terms for your business's circumstance. And it's going to help you determine exactly how to achieve that scenario. But it all starts with the business fundability test, which you can access the test below the video. It's only going to take you about 10 minutes of your time, and it provides an extremely valuable resource for you getting the funding that you need. Now, we know your time is valuable, so we promise not to waste it. I want to thank you for watching this video, and I truly hope it has given you a great insight on your next steps to getting business funding. This is David Locker for BNG Loans, and we will see you on the inside.